Good morning and welcome to the Appropriations Committee. We have a lot on our agenda today, but before we begin, I wanted to give the committee members the opportunity to introduce themselves, and we will start with our House Chair, Representative Gatine.
Thank you, Senator. My name is Drew Gatine. I represent parts of Saco, Scarborough, and Westbrook in the main house.
Good morning. I'm Cameron Rennie. I represent Senate District 13, which is most of Lincoln County and the towns of Washington and Windsor.
Smokes, there we go. Good. Oh, it must be. Good morning, everyone. I'm Sue Bernard. I represent Senate District Number 1, which are 35 towns and cities in northern Aroostook County. Good morning, everyone.
Good morning. I'm Jack Duchamp. I represent towns of Madison, Norridgewock, and Cornville in District 71.
Good morning. My name is Holly Stover. I represent House District 48, including the 6 beautiful coastal towns of Boothbay, Boothbay Harbor, Southport, Edgecombe, Westport Island, and South Bristol.
Good morning, everyone. My name is Decca Dalak. I represent House District 120, which is part of South Portland.
Good morning. I'm Representative Ken Fredette. I represent House District number 33, which includes the towns of Corinna, Newport, Etna, Dixmont, and Plymouth, and lacking one courthouse now for a year and counting. Not that I'm counting.
Good morning. My name is Michael Brennan. I represent District 115, which is part of Portland.
Good morning, everyone. I'm Mark Bly. I represent House District 138, which is Cornish, Leamington, and part of Hollis and Buxton.
Good morning. My name is Ann Matlack. I represent House District 43, which includes the communities of Cushing, Thomaston, South Thomaston, St. George, and a part of Owl's Head, all in Knox County.
Good morning, everybody. My name is Amy Arata, and I represent House District 104, which includes New Gloucester and part of Gray.
And I'm Peggy Rotundo. I have the honor and pleasure of representing the city of Lewiston in the state Senate and the Senate chair of the Appropriations Committee. I also want to acknowledge Maureen Dawson, our principal analyst. And Becca, thank you for being here today to take care of us in this first part of our meeting. The first item on the agenda is a report from the Revenue Forecasting Committee, and I understand Amanda Rector, our state economist and chair of the committee, will be making a presentation to us. And I don't know if you want to bring up other people as well, Ms. Rector, but please do if you would like to. Good morning and welcome.
All right. Good morning. Thank you. Make sure I'm organized here. All set. Okay. Good morning, Senator Rotundo, Representative Gatine, members of the Joint Standing Committee on Appropriations and Financial Affairs. My name is Amanda Rector. I'm the Maine State Economist in the Department of Administrative and Financial Services. I'm currently the chair of the Revenue Forecasting Committee, also known as the RFC. I'm joined today by several other members of the committee, including Mike Allen, Chris Nolan, Luke Lasher. We're here to provide an update on the latest RFC forecast following the meeting on November 24th. The committee met on November 24th to review the November 1st forecast by the Consensus Economic Forecasting Commission, also known as the CEFC, and to meet its statutorily required December 1st deadline for providing the governor and legislature with an updated revenue forecast for the FY 26-27 and FY 28-29 biennia. As a reminder, the RFC is required to use the CEFC's economic forecast when developing its revenue forecast. As with its forecast in the spring, the CEFC made only a few changes to its economic forecast for calendar year 2025 and left the remainder of its forecast unchanged. This was in part due to the ongoing high degree of uncertainty, particularly for the out years of the forecast, paired with a lack of current data resulting from the federal government shutdown that was in progress at the time of the CEFC meeting. The CEFC will reconvene in late January for their next update and hope to have additional clarity on economic conditions at that time. After incorporating the revised estimates of personal income for 2024 from the U.S. Bureau of Economic Analysis, the Commission revised its forecast for total personal income growth up from 4.1% to 5.6% in 2025. The remaining years of the forecast were left unchanged at 4.1% in 2026, 4.4% in 2027, and 4.3% in 2028 and 2029. The only adjustments to the components of personal income were made to wage and salary income, which was revised up in 2025 from 4.0% to 4.8%, and personal current transfer receipts, which was revised up in 2025 from 5.0% to 9.9% to reflect the retroactive payments to Social Security beneficiaries from the Social Security Fairness Act of 2024. The CEFC also revised down its forecast for annual inflation as measured by the Consumer Price Index, or CPI, from 3.2% to 2.8% in 2025, and left the remaining years unchanged. The forecasts for wage and salary employment and corporate profits were left unchanged for all years. In its November 2025 report, the CEFC emphasized the ongoing elevated uncertainty in the current economic forecast. In particular, the CEFC highlighted rapidly changing tariff policies and a period of significant federal fiscal austerity, exacerbated by the recent federal government shutdown. Additionally, the CEFC noted that current economic growth may be driven more by wealthier households, leading to a K-shaped economy. The RFC continued the discussion of heightened uncertainty, especially as it relates to the frequent changes in tariff policy and the effects on consumer and business sentiment, both of which are substantially lower than they were at the beginning of 2025. The CEFC made a few changes to the key economic variables used by the RFC in their revenue forecast, in part due to the high degree of uncertainty in the economic forecast. After reviewing recommendations from the Office of Tax Policy and Maine Revenue Services and from other state agencies, the RFC revised its May 2025 general fund revenue forecast for FY26 up by $165 million, increasing 0.9% from FY25, and revised up its forecast for FY27 by $83.3 million for an overall upward revision of $248.4 million for the 26-27 biennium. FY28 was revised up by $77.2 million and FY29 was revised up by $90.5 million for an overall upward revision of $167.7 million for the 28-29 biennium. The forecast for individual income tax saw an upward revision of $158 million for the 26-27 biennium and $114 million for the 28-29 biennium. However, the forecast for corporate income tax was revised down by $14.6 million for the 26-27 biennium and $25.1 million for the 28-29 biennium. The sales and use tax was revised up by $66.5 million for the 26-27 biennium and by $51.6 million for the 28-29 biennium. The primary source of the upward reprojection in individual income tax revenue is updated information on tax year 2024 and incoming information on the strength of tax year 2025. While changes to the economic forecast, particularly wages, dividends, taxable interest, and inflation, have a positive impact on the revenue forecast, capital gains associated with the resurgent stock market during 2025 are the primary driver of the upward revision to FY26 revenue. When the RFC met in late April to prepare its May 1st revenue forecast, the stock market, S&P 500, was down 12%, and based on that roughly 4-month performance, the RFC assumed tax year 2025 capital gains realizations by Maine resident tax filers would decrease 18.6%. Since the May 1st forecast, the S&P has increased by approximately 1,450 points and is now up 12% for calendar year 2025. As a result, the December 1st forecast assumes tax year 2025 capital gains realizations by Maine resident filers will increase 16%, translating into an increase in tax year 2025 resident liability of $71 million. It is important to bear in mind that there is a high degree of risk associated with the forecast as a result of the extremely uncertain economic environment we continue to face. Both the CEFC and the RFC will continue to monitor the economic and revenue situation for Maine, with the next updates coming February 1st for the CEFC and March 1st for the RFC. This concludes my summary of the November 2025 RFC meeting. We would be happy to answer any questions you may have.
Thank you
you.
very much, Ms. Rector. Questions? Representative Bleier, I'm sorry, and then Representative Barata. I'm sorry, I saw his hand go up first. Sorry.
Thank you, Madam Chair. I'm just curious, thank you for being here today. The salary income revised up in 25 to 4% to 4.8%. Is that because more people are working or people's wages have gone up?
So that was a reflection of data that had come in from the Department of Labor and from Maine Revenue Services in terms of sort of year-to-date withholding data and wage data from Department of Labor. For the most part, it's reflecting increases in wages. Employment itself has been relatively flat.
So wage increase, thank you. Then my next question is, when you're looking at the S&P, you anticipated a 12% decrease, but instead you got a 12% increase. That's 24%. And so I'm trying to figure out how you got a 16% increase out of a 24% change.
So it's the
Excuse me,
relation.
Dr. Allen,
Oh,
would you
I'm sorry.
introduce yourself?
Hi, my name is Michael Allen. I'm the Associate Commissioner for Tax Policy and DAFs. It's the relationship between the stock market and capital gains realizations. It's capital gains that are actually showing up on a taxpayer's tax return. And that's the important measure we're trying to forecast for purposes of revenue. So that relationship, there's a close relationship between the stock market and capital gains, but it's not a one-to-one relationship. And that's the tricky part.
Representative Barata?
Thank you, Madam Chair. Thank you all for being here today. You've partly answered one of the questions I had coming into this, which was, why is the revenue forecast so much different than the economic consensus economic forecast? Because, based on that report, I expected to see everything flat. So this increase was a surprise to me when it first came out. But how common or how is this something that you've done before, where you've seen the consensus economic forecast and you've said, okay, thank you for your input, but we're going to go with with the Office of Tax Policy and the Maine Revenue Services telling us that this is going to have we're going to have a greater impact in revenue than the economic forecast predicts. Is this a common thing to occur? Has this happened before? I don't recall. And so I'd like to know how, the level of certainty, I guess. And
maybe I'll start and then Mike or Chris can chime in. I think there are a couple of things to keep in mind. One is that the revenue forecast does use the forecast from the CEFC. Part of what you're not seeing in terms of the changes, 2024 personal income was revised between the previous meeting and this new one. So even though the CEFC didn't make a lot of changes, particularly in the out years of their forecast, a lot of the revisions to the components of personal income were higher. So they were jumping off of a higher base to start from and then growing. And those revisions get captured in some of the forecast as well. And then some of it is related to, I think, the particular components that were adjusted saw some substantial revisions, but this capital gains piece was sort of one of the leaders, and that's outside the sort of the variables that are coming directly from the CEFC. I don't know if you want to try to explain that anymore.
No, and that is always a key, that capital gains are not part of personal income, which is the primary economic variable that the Consensus Economic Forecasting Committee forecasts. And as Amanda pointed out, we have to use the CEFC forecast in doing our revenue forecast. But capital gains is one of the few areas where sort of the RFC has the ability to sort of make a judgment on what those are going to be. Anytime that we have been off significantly on the individual income tax, it's always capital gains. The late 90s, with the stock, the tech boom, we were always off because the stock market kept on going up by 25% a year. And we kept assuming that the stock market was going to have to level off. The problem is that inevitably there's always a downside, and it's making sure we capture that downside when the stock market goes into a slide like it did in 2022. So what you're seeing here is recognition of what's happened during 2025. The stock market has been much stronger than we had anticipated back in the spring. We've taken that into account. But since the 2000 tech bubble bursting, we have incorporated a system of saying we do not believe we believe the stock market will correct over the remainder of the forecast period, which is right now through 2029. We're not predicting the stock market's going to crash next year, but we are assuming in the forecast that capital gains realizations, and therefore I guess the stock market will adjust over the next 5 years and will be in a downward projection over the next 5 years. And so we've sort of, it's a safety valve to make sure that the revenue forecast isn't getting out ahead of the economy and the stock market. We didn't do that in 2000. And in April of 2002, we had our April surprise, and that put the budget out of balance very quickly by over $100 million back when the budget revenues weren't anywhere near what they are today. We were ahead of the game in the 2008 stock market crash because of using this system. We didn't hit it right, but we had built in a decline. So the hit on state revenues wasn't nearly as big as it was in the early 2000s. And so that's the system we have today.
Thank you. That's really helpful. And so do you base your predictions on a certain percentage of people are going to have to realize their capital gains, whether they're up or down or whatever, because of retirement needs, things like that? Or you're looking at past withdrawals from, retirement accounts or whatnot, or in order to extrapolate that going forward?
When I first started doing this work, I was told there were 3 things I should stay away from as far as forecasting: capital gains, corporate income taxes, and state tax. You're never going to get them right. So it's extremely hard to figure out on capital gains. Clearly, the stock market is up, and that's going to generate capital gains realizations. The other difficult part about capital gains realizations is that they are discretionary. You only include them on your income tax return when you actually sell the underlying asset. And my decision about when to sell that asset is going to be based on various situations that I may be in. One of the big difficulties in the past has been either federal or state tax changes, right? So if the federal government's, it didn't happen with this last tax bill at the federal government, that the feds did, but in the past, if the feds have said, oh, we're going to have a capital gains tax cut starting in January, nobody's realizing capital gains in November and December because they're going to wait for that lower rate, and vice versa. We've seen years where people will accelerate capital gains because they know there's a federal tax increase coming. We saw that in Maine during various periods. There was the November 2016 referendum increasing taxes on high income people. And we were one of the few states in 2016 that saw an increase in capital gains because we assumed taxpayers realized there was an increase coming and they accelerated gains. So there's a lot of behavioral issues that need to be taken into account. This is our best guess at this point in time, given where the stock market is, of what we could see for capital gains for the 2025 tax year.
Thank you.
Yep.
Yes, Representative Brennan.
Thank you, Madam Chair. Thank you for being here. Could you, just a couple of things quickly. You say current economic growth is driven by wealthier households. And if you could tell me what a wealthier household means to you. And then secondly, right after that, you said leading to a K-shaped economy. Some people argue that Maine's economy mimics the national economy. Are we seeing a K-shaped economy in Maine as well that is similar to what we're seeing at the national level?
Yeah, so a lot of the sort of definitions there are fairly subjective. There's not sort of a hard and fast rule for wealthier versus non-wealthier households for this. A lot of what they were considering, and this is a national trend, not just a state trend that is happening. A lot of spending and ongoing sort of economic activity seems to be coming from higher income, higher wealth households. In particular, there has been, if you look at the consumer sentiment survey that's done by the University of Michigan, the high stock holding households have been far more optimistic, particularly as the stock market was very strong. They were sort of bucking the trend. Everybody else was feeling worse about their financial situations. Those households were feeling better. And there's some evidence that particularly on the low end, we're starting to see delinquencies in payments, credit cards starting to creep up, those balances starting to creep up. So it forms sort of this K shape where you've got a divergence between the higher income, higher wealth households doing better. And that is sort of, if you look at a top level view of the economy, that's enough to sort of offset some of those declines that are starting to happen in lower income households.
And again, but is that occurring in Maine as well? Do we see those type of characteristics in Maine?
It's a little harder to get the data that would show that specifically for Maine. I think when the CEFC was discussing, they were looking at national trends and feeling that there was no reason to believe that Maine would be seeing something different. Yeah.
Other questions? Yes, Representative Fredette.
Good morning. So in looking at the revenue forecast, I guess what I'm trying to figure out in my head is and I didn't hear it mentioned in your presentation, that federal legislation is passed, and there are tax changes in the federal structure of taxing as a result of that. And there are implications for states as a result of that, otherwise known as tax conformity, I guess. And so if in looking at your proposal, have you, I guess I didn't see any mention of tax conformity and how that would impact revenues. Is that right?
Well, the revenue forecast has to be done on current law. We can't anticipate what the legislature may do in the upcoming session. So at the moment, we conform to federal law through the end of 2024.
So if I may, so, so right now, I mean, obviously, 50 states and some states have already passed tax conformity. And so some states will enjoy lower taxes because they've adopted those. We haven't in Maine, correct?
The legislature will have to make that decision when they come back in January, yes.
Right. And so, do you have any idea, I mean, what tax conformity would cost if we were to adopt my experience is in the past, when I served here from 10 to 18, there would always be conversation about tax conformity. And at the end of the day, we would conform because isn't it in fact true that, we run off the federal tax return as from the main revenue perspective. Is that right?
We start with federal adjusted gross income on the individual income tax return, and we start with federal taxable income on the corporate income tax return,
Okay.
correct?
Right. And so if are we currently conformed to the federal law?
We conform to federal AGI and federal taxable income for the Internal Revenue Code as of December 31st, 2024, with some exceptions. There are addition and subtraction modifications on the individual income tax return where we differ from the feds. And there are addition and subtraction modifications on the corporate income tax return where we differ from the feds. For instance, we don't tax Social Security. So if you do have taxable Social Security on your federal individual income tax return, you subtract those taxable Social Security benefits to get to Maine adjusted gross income.
And so in fact, if we don't conform and people are filing for 2025 going forward, it's essentially, if I'm a business, I'm essentially going to have to keep sort of two records going forward. Is that right? I mean, I'm going to have federal records and I'm going to have state records in order to be able to do both tax returns because we're not in conformity.
Certainly for items like depreciation, where there's a period of time where you're amortizing or depreciating the asset, yes, you would need two sets of books.
And so in essence, let me ask this question. In looking at revenues going forward, when will be your next report?
March 1st.
And so, I mean, we may or may not have adopted anything at that point in time. And so I guess in terms of looking at revenue projections, I assume speculatively that the governor's office will do a supplemental budget based on sort of current revenues as provided by the Revenue Forecasting Committee. Does that sound right?
It's my understanding the governor has to submit a budget based on this revenue forecast, but she may have proposals to change revenues.
So in essence, if 49 other states were to adopt the federal provisions of the reduction in their tax codes, and Maine did not, Maine taxpayers would essentially be paying more than the other 49 states in that theoretical question. Is that right?
Well, it's not changing their federal tax. I mean, they're going to have the same benefits at the federal level as
No, I'm not
everybody
asking
else.
about federal. I'm talking about the state. If the state doesn't adopt the federal, if the state does not adopt the federal changes that have been passed, then, I mean, the theory is, right, that we have 50 states and we all sort of try to play nice together, right? And so states can choose to not pass tax conformity or to pass tax conformity, correct?
Correct.
And
Well, yes, some states are what we call rolling conformity states. They just automatically conform to the federal law, no matter what it does. We're a static conformity state. The legislature needs to decide.
so is it a fair statement to say if Maine does not pass some sort of tax conformity, Maine theoretically could be paying sort of higher taxes than other states that have? Is that fair?
Well, the main tax system is different than the other 49 state tax systems. So whether a Maine household with similar income is going to pay more or less in taxes than somebody in Nebraska that has similar income is going to depend on the Nebraska.
So all right. So let's go with your theory then. So in theory then, again, I'm just trying to look at revenues as we anticipate a supplemental budget coming out in January. So I'm a tip wage earner. So, oftentimes we might assume, or at least theoretically, for the purposes of this question, let's assume those are lower income wage earners. And if I'm a tip income earner and I'm in Arizona and they've adopted federal tax conformity and all other things being equal, someone in Arizona is going to pay less income tax than if they were living in Maine. Wouldn't you agree with that?
No, because I don't know what the Arizona tax system is at the moment. It could be putting the tip change at the federal level aside for a moment. It could be that worker in Maine is paying no income tax at the moment because we have a very high standard deduction. We conform to the federal standard deduction. We went to the higher standard deduction before the federal government did. They copied us. So, and we have personal exemptions that we offer taxpayers that the federal government doesn't offer and many other states don't offer. So you need a decent amount of income in Maine in order to become taxable under our income tax. That's not true in a lot of other states.
Well, we also have a fairly low level at which we become the highest income taxed. Right, about 57,000.
We hit the top marginal tax rate in some cases at a lower point than other states, in other cases where we're higher. It's all over the map. It really is. But
so your analysis is that we have built into this revenue forecast, we have an additional roughly 240 million, 230 million for this.
Yes, for the current biennium, 240.
So have you done an analysis that if we were to conform to tax conformity, what that would cost?
Yes, we presented that to the committee.
Yes, I'm asking you now, though. Do you know what that number is?
I don't have it off the top of my head, but we presented to the Appropriations Committee and the Tax Committee in mid-October our estimates of conforming to all the provisions that pose a conformity issue to the state. And we also included estimates of provisions like tip and overtime that are not strict conformity issues, but we knew there was of interest to the legislature, and we presented those estimates as well.
Representative Fredette, we have all that information. It was given to us at the last
I have a few
meeting.
more questions and I'll be done.
Okay, that's fine. I just wanted you to know that we have that information as a committee.
Yeah, I just know the public sometimes isn't aware of that information, and so.
Right, and I
it's
think,
important for them to
the
have this
public
information.
wants that information. It was all discussed at the last meeting.
Yep.
There was a public discussion, and it's certainly public
Yeah.
information.
Yeah, okay, I'm just wrapping things up if I can.
Okay.
Yep. So, obviously, based on, we have additional revenue which could be used to offset tax conformity if we chose to do that. Would you agree?
Yes, that's
Okay. So I guess my last question is that as part of the most recent biennial budget, we raised taxes. Is that correct?
I think on net, there were net taxes raised.
And so I guess I'm a little bit, I'm trying to figure out, I guess I'm not sure if it was based on the prior forecast or now the new forecast, but my recollection is we raised taxes by about 110 million in the biennial budget. Is that about right?
I'd have to go back and look at, the OFPS status sheet, 110 million.
Yeah, look, look at that. I still got that figure in my head. So I guess I'm just a little bit frustrated that, taxes were raised in the last biennial budget on Maine taxpayers by $110 million. And now we have a $250 million surplus. And I think that's bad policymaking. And I'm frustrated that we should have been able to look at that budget and say, you know, we really don't need to raise taxes. And now we have, and you're not going to undo a tax that has already been paid. So I understand the uncertainty built into the budget, but I'm also frustrated with the outcome that it has resulted in more taxes on Maine people. Thank you.
Other questions? Yes, Representative Ducharme.
Not to beat the tax conformity thing to death, but I just had a question. The federal tax breaks that were put out there, it seemed to me that they were in an attempt to kind of flatten out that K shape of the economy, where you have one place going up and another place going down. And the conformity pieces, some of the ones that are kind of probably most important to the average Mainer are the folks that are probably making on the lower end of the scale. Is that, by not being in conformity with the feds, is that going to hurt us in terms of those people? I mean, they're going to have to pay taxes when others in other states don't have to on similar incomes. And I just am wondering if that, you know, that's going to exacerbate that K-shaped economy, or if it's going to flatten it. Because I think at the federal level, it was designed to flatten that.
Again, those changes were made at the federal level based on the federal tax system, which we do piggyback off of to a great extent, but they are not exactly the same. Maine has additions and subtractions to get to Maine adjusted gross income. That in many cases, we tax some income that the feds don't, and vice versa. We just income the feds tax that Maine doesn't, because of policy decisions made by the Maine legislature. We have different rates, different brackets. We have credits that the federal government doesn't have. They have credits that we don't have. It's just hard to say that somebody, you know, in a certain situation in Maine is paying more or less in taxes than somebody else in another state. The systems just differ across the country, as well as at the federal government, at the federal level.
Yes, Representative Bleier.
Thank you, Madam Chair. So just for clarity for me, when you were speaking a while ago about you use the tax brackets for up to 2024. So if I think the number, and I'm just for sake of argument, I thought it was around 400 million for tax conformity. And so if that number is correct, then when we look at these out years, 26, 27, 28, 29, if we did tax conformity, those numbers would probably change by 400 million. Is that correct?
If the legislature passed legislation that conformed to all the federal provisions that you're speaking of, then there would be a fiscal note, and OFPR would layer that fiscal note onto this revenue formula.
But that would be an accurate statement, what I said, that those numbers would change roughly by 400 million, if that number is correct.
Correct.
Thank you.
Any other comments? Yeah, Representative Gattini.
Thank you. I've just got a couple of questions. The increase in this current fiscal year is largely driven by income tax increases, right? We didn't make any changes to the state income tax code in the last session that are driving those changes, right? When we talk about the changes to taxes that we made, you know, I don't recall, you know, any of them, let alone the big ticket ones being related to individual income tax. Is that right?
The only individual income tax increase that I can remember in the last budget was the phase out of the pension deduction for
Okay.
higher income taxpayers.
Got it.
And that was about $20 million
Okay.
a year or something.
Great.
But that's actually this forecast, there really weren't a lot of changes to fiscal notes. I mean, every time we do a revenue forecast, we go back and look at fiscal notes to see, do they need to be adjusted?
Right.
There were very few adjustments to those fiscal notes in this forecast. Most of this is being driven by the economic forecast and experience now having all the 2024 tax returns in
Right.
and being able to jump off of that base, and the big one that we discussed earlier, which is
Right.
capital gains.
Right. And the forecast you do for the 1st of December for the current fiscal year that you're in is also significantly informed by current collections, right? I mean, you have July, August, September, October real data in front of you in terms of how we've been doing when you're making those decisions, and to do a large adjustment down when we're actually seeing net favorable you would have to conclude that something dramatic was going to, I don't want to put words in your mouth. You'd have to conclude that something dramatic was going to happen between that point and the end of the next fiscal year.
Yes, and the big piece of information was the September estimated payments, which clearly reflected the fact that the stock market had recovered late spring over the summer.
Right. So again, I mean, I think overall this forecast reflects a relatively steady and strong economy in Maine, based upon accounting for the fact that we still hear this word uncertainty pretty frequently.
Yes, but taking into account the fact that there does seem to be this sort of K-shaped
Right.
economy right now.
Right. So I don't know if you're going to be able to answer this question, because I don't even know if I can correctly ask this question. This discussion about uncertainty now is, I think, it's a word we hear all the time. It's a word we've heard the last 3 or 4 times that this group has gotten together with you after one of these forecasts. And pretty short turnaround between now and the next time the CEFC and the RFC are going to be meeting. And I think Director Rector, I think he said again that we're still going to be dealing with uncertainty. Is the uncertainty at this point, assuming there's no major changes in tariffs, additional major changes in tax policy, major changes in federal policy that impacts the economy, do you think we'll still be have to concern ourselves so much with uncertainty, or do you think we'll be someday getting to the point where we can kind of evaluate things the way that we used to and not be so worried about everything else going on that we don't have any control over?
Yeah, I mean, there's always uncertainty in forecasting, obviously. It certainly has been very high. I think one of the challenges at both for this past forecast and for the one that's coming up, a lot of the data that the CEFC relies on is federal data, and they didn't have the federal data they were used to having. And a lot of that has been delayed. They should have a little bit more has come out. They should have a little bit more when they meet at the end of January, but even then, some of the things that they would be looking to have been, it's sort of the whole schedule got shifted out. So they'll still be at that meeting, sort of a little shorthanded in terms of the data that they typically are used to having, which adds more uncertainty to their forecast because they don't have sort of the full picture that they're used to seeing. And I think that in terms of the policy related uncertainty, you said, well, assuming that there aren't any more big changes to those things. Well, that's where the uncertainty has been coming from this last year has been, okay, we think we know what tariffs are, and then the next week they're actually something completely different. And so
Right.
that's, we can assume that they're whatever they're going to be, but the likelihood is that, at least based on what we've seen, they're more likely to change again than to sort of hold steady. I would be really happy to see sort of some more policy stability because that makes it at least a little bit easier to do the forecasts. So hopefully we'll start to see that. But I think that at least for the next forecast, there's probably still likely to be a pretty high degree of uncertainty.
Yeah.
At least in terms of not having as much data as they're
Yeah.
used to having.
So we don't think that problem's going to necessarily get any better between now and January or February.
On the
On the
data
data
side,
side.
no, a lot of the federal agencies have been releasing updated data release schedules. Late January there are a bunch of things that are coming out. But there have been a couple of things that have been canceled entirely because the federal agencies weren't able to do the surveys that they needed to do. So we won't have October inflation numbers at all, ever. It's going to be a series break. And then we're still waiting to get sort of fully revised schedules for data as it follows.
I have just one more question. It's a little more specific. I don't know if it's going to be easier to answer. Maybe Dr. Allen might be the person for this. So again, over the last several cycles, over the last several years, I think that we've talked about the unpredictability of our corporate tax collections and our corporate tax forecast. And it looks like we're doing a revision down. Can you tell us a little bit more about what you think is going on in the corporate tax world?
I'll try.
That's all I'm going to ask.
We have started to see over the course of the last year, maybe a little closer to a year and a half, corporate collections starting to level off and actually decline on a year-over-year basis. We think some of that is because corporate profits have now started to slow a little bit. And there's some speculation that one reason why maybe the tariffs haven't hit inflation quite as hard as everybody had anticipated is that businesses have been eating some of those tariffs and not passing them on to consumers, recognizing that in a lot of cases, consumers are in a tough position right now. So that's lowering their profitability a bit. We also think that corporations had been paying in too much all along, and when we were seeing the big run up, and we think that they are now making those adjustments to pay in really just what they should be paying in. And then what we've been in discussions with our colleagues in other states is that it's possible that the state tax payments that corporations have been making since passage of the OB3 are reflecting some assumption about conformity to those provisions. And since they're lowering their federal estimated payments because of those federal tax changes, they're also making lower payments to the states. And that's just speculation. Nobody knows. But I mean, clearly after passage of the OB3, the September estimated payment that was due at the federal level was down 33%. And so it was clear that corporations understood that many of those tax cuts were retroactive to 2025, and they made an adjustment to their estimated payment. But our September estimated payments weren't down by a third, but they were down in the 15 to 20% range. And that's what we're hearing from other states as well. So we don't know if that is related to the federal tax change or if it's, just what's happening to corporations as far as their profits go. And that's why they're making those payments. But
Thank you.
it's tricky right now.
Representative Brennan.
Thank you, Senator. I'm not sure corporations ever pay too much, but you don't need to answer that at this particular point. But and my superficial understanding of economic forecasting at this point, there seem to be two factors driving the economy: wealthier person spending and AI, artificial intelligence, and investments in that. Have we seen a noticeable increase in Maine in that sector of investment, artificial intelligence, that is also fueling some of this economic growth? Or I guess I'm getting back to Representative Gattin's question about uncertainty. If we're just building an economy on the spending of wealthier people and AI, that uncertainty may be greater. And I just don't know if AI is becoming a larger segment of our economy within the state of Maine.
I have not seen any data that would really let us parse that out to that degree. Certainly that has been fueling a lot of stock market growth. But in terms of sort of other investments that would be taking place within the state, I think a lot of it is still sort of either very recent or still future looking. And so I haven't come across any data that would allow us to have seen an increase already taking place.
Yes, Representative Fredette.
Thank you, Dr. Allen. Sort of going back to, I think, a little bit of what you had talked about in regards to the forecast. Is it my recollection that the federal bill that was passed in regards to the tip income, there was a change to the tip income provision at the federal level? Is that right?
There's an exemption. I think it's up to $25,000 of tip income.
That was,
remember if that's the overtime. The overtime and the tip
right.
Similar in the sense that they have an exemption amount, and then that exemption amount phases out as your income rises.
And that was new, is that right?
Both of those were new, the tip and the overtime, yes.
Okay. And then there was also a change, is my recollection correct, in regards to senior citizens can earn more money without having tax implications? There's some provision in the federal bill for that as well.
So the federal bill brings back a personal exemption for people 65 and older. It's $6,000 per taxpayer. So for joint filers, it's $12,000, $6,000 per spouse.
And so at the federal level, someone either being 65 and older or being a tip income wage earner at the federal level may experience less, or theoretically would be paying less in taxes as a general policy rule.
If they're eligible for the tip exemption and they're eligible for that senior citizen exemption of $6,000, yes.
And if we were to pass just those provisions as it applies to senior citizens and or tip income, low income, tip income earners in Maine, that would change your revenue projections as well. Is that correct?
If the legislature conformed to the tip exemption at the federal level, there would be a fiscal note, and OFPI would layer it on to the revenue forecast, yes.
And we haven't done that to date, is that correct?
We've provided you with an estimate of what conforming to the tip exemption would do to state revenues, but there's no legislative proposal, or the legislature hasn't taken any action on it yet, so we can't include it in the revenue forecast until there's a law passed.
Thank you.
And as we discussed in our last Appropriations Committee meeting, we know there is going to be a very robust conversation around conformity in the upcoming session. We know that for a fact. Did you have something that you wanted to add?
Yes, thank you, Madam Chair. I just wanted to thank our guests because I think you know just as well as all we do that really all we can be doing here is making the very best decisions we can with the information that is available. Appreciate you bringing this information and making it available for us to make those decisions. You just said it, I wanted to reiterate, we did go over a lot of the tax conformity data that you brought to us our last meeting, and I'm really looking forward to see what the tax committee comes up with, because it's big, complicated questions, and it's not the same in every state, and we are going to have a lot to grapple with. So just thank you for being here, and I look forward to us getting to the point where we should be having those discussions.
Anything else? Many thanks to you all for being here today and for your work. Yes, Director Nolan.
I just wanted to let you know that we gave you updated status of general fund, highway fund and fund faculty main, reflecting the forecast. So the colored blue box on the general fund is the change for this revenue forecast. On the highway fund, the green box is the impact, and on fund faculty main, the pink box is the impact. So I'll let you know that you have that as well in your packets.
Thank you. Again, many thanks to the committee and for being here today. Thank you. And we're going to have an introduction of some new, not necessarily new staff, but new roles that some staff members are assuming. Director Nolan, do you want to introduce folks?
Yes, thank you. I'd rather talk about the status sheet, but it's okay. No, it's okay. So as you may have heard, Maureen, Rachel has retired, and Maureen will be retiring at the end of this month. So we have been, we knew it was coming. So we have been active in trying to find people to succeed them, not replace them, but to succeed them. And I think two of them are here. I know Rob is here, but I think Lucia came in. So we are very lucky that Lucia is going to step in and succeed Maureen in staffing the Appropriations Committee. If you don't know Lucia, she has been with us for a couple of years. Did tax her first year and did HHS her second year. So those are two really good training sessions in how we do things. But also she worked at Opega for a couple of years as director and worked at OPLA for how many years? 5? Oh. So that gives her great experience in staffing a committee. So I think we are very lucky that she is going to step in and succeed Maureen. So we to replace her work in HHS, we hired one individual who started already, Rob Stowe, who's back there. Rob is worked at Camden National Bank as a credit analyst. He's got some great analytical skills that we are hoping to take advantage of. He does have, for good or bad, three former HHS OPR analysts, and Lucia, Luke, and me, to provide him assistance with HHS if he needs it. And then we have a third person, Jackie Kremos, who is starting in January, who will be doing Rachel's Education and Labor Committee analyst role. And she is moving up to Maine. Her husband's family is in the Falmouth area, so they wanted to come up and settle in Maine. And she currently works at the Federal Reserve Bank. So we went all banking this time, Representative Sharp. But we think both of them have excellent skills. They will, have a learning curve, as we all did and still have. But we think we're lucky to have those to get those people to work with us. So that's all I had.
Thank you. Any questions for?
Oh, we're also filling, hopefully very soon, your committee clerk position, so that Becca doesn't have to be, and Mandy be here all the time, so. Thank you.
Thank you, Chris. Stellar appointments. And we are heartbroken to see Rachel and Maureen go, but look forward very much to working with Rob and Jackie and Lucia. So welcome. We are going to take about a 10-minute break at this point, and we will then come back and start our work session on the bills that are before us. And I'm sorry to those in the audience who are going to have to wait a little bit more, but we will be back, and we hope it's a very, very short break. Thank you.
Welcome back, folks, to the Appropriations and Financial Affairs Committee room. So the next part of our agenda for today are a number of work sessions on bills in our possession. And I'm just going to read them off so folks know the order that we're going to go. And we're going to go on the order that they've been advertised. So the first bill we're going to take up is LD 1312, an act to provide a source of revenue for school construction and for the Land for Maine's Future Trust Fund. The next one is LD 1521, an act to require all state agencies to provide a zero-based budget once every 10 years. The next one is LD 1636, a resolve to study changing the start of the state fiscal year to October 1st. And finally, LD 1775, an act to authorize the issuance of a revenue bond to upgrade county jails to meet the corrections needs of Maine counties. So again, we're going to go in that order. So we're going to start out by opening up the work session on LD 1312. And I think Maureen is going to walk through the bill analysis that she has so ably provided for us.
Okay, this bill was originated as a concept draft. And prior to the public hearing, the sponsor submitted the proposed amendment that changed the law governing the transfer of investment proceeds credited to the Budget Stabilization Fund when that fund is at its statutory maximum balance. So under current law, when the fund is at its maximum, which is 100% of, how does that at its maximum? 100% of those investment proceeds, which is really the interest earned from the cash pool that is allocated to that fund. 100% of those funds are transferred to the irrevocable trust fund for other post-employment benefits for state employees. The current law has it just going for the state employees to reduce the unfunded liability. The trustee of that fund is the Maine Public Employees Retirement System. The proposed amendment to the bill would provide that when the stabilization fund has reached that maximum, the investment proceeds, the interest, would be transferred 50% to major capital school construction fund, 25% to the Land for Maine's Future Trust Fund, and 25% to the Irrevocable Trust Fund for other post-employment benefits for the state employee which is not the teachers. So from the testimony, a couple of potential amendments were brought up. Scott Brown, the Director of School Facilities for the Department of Education, proposed an amendment to direct the 50% transfer that was proposed to go to the Capital School Construction Fund to instead be directed to the School Revolving Renovation Fund. The Maine School Boards Association testified in favor of passing the bill as proposed amended, as it would send a message regarding the seriousness of the school construction issue. However, one of the reservations that was expressed was that the loss of funding to the Irrevocable Trust Fund for Post-Employment Benefits could, quote, lead to other financial challenges in meeting these obligations. Again, neither the current law nor the sponsor's proposed amendment directs funding to the unfunded post-employment benefits liability for teachers. So if your intent is to actually transfer to both teachers and state workers, that would have to be further amended. So a preliminary fiscal impact statement wasn't completed, but there would be obviously potential increases in revenue for the two recipients of the transfers, the two new ones, which is the school construction and to the Land for Maine's Future. Let's see. And then a loss to the Post-Employment Trust Fund, which currently would get 100% of those. The state controller testified that the loss in earnings in the trust fund would likely exceed the gains to the other funds due to the differences in potential earnings between the cash pool and the fund that is run by MainePERS. That yields a little bit of higher returns for various reasons, one of which the controller said was that the cash pool is generally shorter term, whereas main PERS can invest in longer term investments. So I've attached to the analysis, obviously the sponsor's amendment, and also a bit of a history that Mandy prepares monthly about what goes into the main stabilization fund. And also when that stabilization fund has been at its maximum, what was moved into the post-employment benefits. So you can kind of see over the last few years in fiscal year 24, about 38 million was diverted from the stabilization fund to post-employment because it was at its maximum. And in fiscal year 26 to date, about 11 million has been because the fund is at its maximum now. So this bill doesn't impact the stabilization fund because it only kicks in when the stabilization fund wasn't going to get the money anyway. So the proposed amendment would just take that and divvy it up a little differently when the fund is at its maximum.
Thank you, Maureen. I think what we've talked about is we're ultimately going to table this bill today because I think there's work going on in the education committee and a report that they're going to be getting that I think could inform our further discussions about this really important issue. But before we get that motion to table, which will cut off any discussion, I want to make sure if people have any questions for Maureen about the analysis that she did, that they have the opportunity to ask those questions. I don't see any. So is there a motion? Representative Brennan.
Thank you, Mr. Chair. I move that we table LD 1312.
Is there a second?
Second.
That's been moved by Representative Brennan, seconded by Representative Ducharme, that we table LD 1312. All those in favor? Looks like we are 12-0 in support of tabling. Thank you. So the next item is LD 1521, an act to require all state agencies to provide a zero-based budget once every 10 years. Again, we're going to start out with Maureen presenting her work analyzing the bill.
Okay, as written, the bill requires each department and agency in the executive, judicial, and legislative branches to prepare and submit a quote zero-based budget document at least once every 10 years. And in this bill, zero base is defined as a practice in which the programs and activities are justified using a cost-benefit analysis without regard to prior state budget. It requires the Department of Administrative and Financial Services to submit legislation amending statutes in such a way to allow for and facilitate that process. Through testimony, there was a few potential amendments came out. Sponsored testimony included a sample or potential schedule of the first 10-year cycle, specifying when each department or agency would be required to analyze and submit their budget under the new format. I believe this was sort of a sample as a idea of how that would be implemented. A schedule could be incorporated into the bill the way the State Government Evaluation Act was constructed. And I have on my desk, which is not in here, I have the State Evaluation Act, so you can kind of see how they constructed it, although most of you are very familiar with it. This could be a part of the direction to DAFs regarding the content of the proposed legislation or as amendment to the DAF's proposed legislation. So you could put that schedule into statute at some point if you so desire. The judicial branch testimony included a proposal not included in their written testimony, but in any written, but they had requested that branch be exempt from the provisions of the bill so that they would not be doing that zero-based. And one AFA member wanted more information from DAFs on how the governor's budget proposals are built at the administrative level. So one member of the committee wanted some detail, not as part of the bill after it was passed, but ahead of time. It's not clear whether that would be ahead of the action or as a substitute to the bill, meaning turn the bill into a study. Or less formally, it could have been during one of AFA's interim, so that the DAFs could delve into how at the administrative level these budgets are built. There's some potential issues or technical consideration. Obviously, this bill is a carry forward, so that should you want to pass it, you would want to amend the dates that are in the bill. Pretty typical for carried bills. And also the term zero-based budgeting is defined in the proposed bill, as we've said, as a method on budgeting in which programs and activities are justified for a budgetary period using cost-benefit analysis without regard to the amount that was budgeted. That's how it's defined in the proposed bill. And this definition combines a budgeting process with an economic valuation methodology. I mean, it's fine. You can define in statute however you want to define it. It's just maybe not the accepted definition of zero-based budgeting. So you could either leave that because it is defined one way in statute, or redefine it, or use a different term. Let's see. So the requirements, the two requirements that are defined in zero-based budget, cost benefit analysis and zero-based budgeting, you could split, you could tell DAFs to do one of the two methods, or you could just leave it alone. Or I sent you, this is an aside, I sent you by email a lot of information on zero-based budgeting. I know several of you have delved into it. So if I'm not making myself clear, which I know I'm not, that would answer your questions. The thing on what zero-based budgeting is, and you can see that analysis, which I think is one of the best I've ever read on zero-based budgeting, talks about zero-based budgeting versus other methods. And this seems to be a hybrid of several methods, which you may want to phase out or separate or just leave alone. So in its purest form, zero-based budgeting is a budgeting process that asks a manager to build a budget from the ground up, starting from zero. That's the pure zero-based budget. Cost-benefit analysis is an economic evaluation method that involves estimating the key benefits and costs, and that may be financial or economic or social, environmental, or cultural. So it's a little broader, but it also asks for some pretty sophisticated estimates of the costs and the benefits, and translates those into dollar terms, and then takes up, I know you all like this part of a net present value of it. That's just the economist in me talking. So the preliminary fiscal impact statement hasn't been completed on this bill, but the costs associated when preparing proposed legislation to implement changes to the budget would be probably less than the cost of actually preparing budgets under the proposed statute. But this bill puts it in statute, so those costs would be real and they would be estimated in the fiscal note, at least for the out years. So the other information I gave you, the zero-based budgeting, modern experiences and current perspectives, done for the city of Calgary. Like I say, that was a really, really well done study. I also gave you a slide presentation from the executive branch. Zero-based budgeting was done, and I believe it was the second biennial budget of the previous administration, and they did a slideshow, I think, done internally in the executive branch, which I gave to you because it really laid out how the executive branch did it. If I recall, the only real impact to the legislature on that was just getting a lot of really good org charts that you liked. But the decision-making and the actual use of that process was internal to the executive branch. It really didn't inform you as much as it did the internal creation of the budget. And I also gave you some information on what cost benefit analysis is, and that's from the Australian government. This is a real international bill. And the OMB circular, guidelines and discount rates for benefit cost analysis. The federal government does do some of that cost benefit analysis. it's exceedingly complicated, and that OMB circular tells you how they are told, the agencies within the federal government were told how to do it. That's just to kind of get your thinking about what you really want from this process, what your aim is, and then how best to get there. And also, I think during the hearings, I think it was you, Senator, that wanted to know if anybody remembers that you had sat with the Honorable Solomon Millet and talked about zero-based budgeting. And the answer is yes, you did, but it was during, yes, it was during, do you remember now? Yes, back in 2006, the Commission to Reform the State Budget Process, that resolved, that set up that commission, told you to look into zero-based budgeting. So yes, you did have a conversation, but it was not as part of AFA, it was part of this, and I think you very early in your report said that you had decided that that was not a practical approach at that time. So
Thank you, Maureen. Very thorough. Appreciate all the information. Going to open it up to the committee for thoughts or questions.
oh, and one thing, there'll be a quiz on all of those attachments I sent you.
As long as it's not a pop quiz today,
It's your
I'll
final
do my
exam, don't
best.
ask.
So I see the sponsor of the bill raising his hand over to my right, Representative Sharm.
Thank you, Mr. Chairman. And thank you for the analysis, Maureen. Very well done. That the City of Calgary presentation that you sent to us was really thorough and was helpful in understanding kind of various hybrid forms of zero-based budgeting. To back up to the 30,000-foot level of the bill, one of the reasons I put the bill in is because we'd have had numerous discussions over my now third term about how 85% of the budget really comes under what's called continuing services, and then the other 15 is what we argue for days about in this room. And so, like many budget discussions in various levels of government and in boardrooms, it feels like we are rubber stamping the preponderance of the budget and arguing over the pennies. And at some point in time, someone has to look at things from a programmatic level. My attempt to bring that to light took the form of zero-based budgeting, and absent other kind of information or ways to get that point across, that's how the bill was developed. In the interim, since we presented to the committee, I have met with former Commissioner Figueroa about how the budgets are constructed through her department across all departments of state government. Gained a bunch of different knowledge about that. I think that looking at the 2011 PowerPoint presentation about zero-based budgeting, they're currently doing a number of those things in terms of the questions that are out there about particular programs. In thinking about that, at some level, as you had said in your presentation, a lot of that information ends up at the executive level, and then we're asked to vote on a budget, but we don't have that backstory. And so that was part of our conversation, my conversation with Commissioner Figueroa at the time, was to be able to figure out a way that we had that information. So perhaps some of this detail work is being done, we just don't know it. Based on that, and looking at the complexity of the work that would need to go into doing truly zero-based budgeting, I am prepared to propose changing this to a resolve whereby we look at how we are budgeting and how we are looking at individual programs within budgets, and how that information is getting to the legislature, and how we react to it. and understand either from a committee level, either a policy committee level or from an appropriations committee level, the efficacy of those programs and should we continue to fund them. And I think that ultimately the goal of my bill was to make sure that the committee of record relative to the finances of the state of Maine had the opportunity to be looking at the pennies in that were out there that were just really getting rubber stamped and making sure that we weren't stepping over pennies to pick up dollar bills. In looking at every program on a regular basis. And so I would propose that we craft a resolve to really understand how that budgeting process is working and how we can bring all of those things full circle so that this committee, the committee of record for the finances of the state of Maine, has a detailed understanding of what we are in fact passing when we pass the continuing services budget. Not that I want to continue to do continuing services budget, but even if we went to a true biennial budget where we're passing the whole thing, we would still want to have that kind of granularity and looking at programs on a very individual basis.
Any other questions for Maureen or thoughts along the lines? Representative Ducharme and I have spent, and the two leads, Chair Rotundo and Senator Bernard, have spent a lot of time talking about this bill and haven't really been able to get to true common ground. Other than, I mean, I'll say that I appreciate this bill in terms of what it's trying to accomplish, in terms of trying to figure out a way for us to have better information and better understanding of what it is that we're paying for as we're making difficult decisions when we're doing budgets and otherwise. So I think what I'm hearing, Representative, is a willingness to continue to work on this in terms of turning it into a resolve that, again, maybe we can get some real consensus on this committee before it goes upstairs. So again, if what you're suggesting is that we continue to work on it, I'd certainly be willing to work on that with you and other members of the committee and OFPR and people from the administration. And again, I think the appropriate thing for us to do would be to table this right now and try to get to that agreement. But before you make a tabling motion, I just want to make sure that, again, people have an opportunity if they have anything else that they want to say about this. And I don't see anybody. So if you've got a motion to make, I think it'd be a good time to make it.
Thank you, Mr. Chair. As I started my remarks with, part of the reason for putting the bill in was to create a conversation. And I think that we've accomplished that, creating the conversation. I think that we have some commonality in our thought process in terms of looking at individual line items in the budget, individual programs and so forth and so on, and how we should be getting greater information on that. And I would certainly think that we could work together to come up with a methodology to do that. And I'd be happy to do that, but I think we need time to do that. So I would make a motion that we would table this.
Second.
Okay, so it's been moved by Representative Ducharme, seconded by Senator Bernard, that we table LD 1521. All those in favor? We are 12-0 in favor of tabling. The next item is LD 1636, a resolve to study changing the start of the state fiscal year to October 1st. Maureen, do you want to?
This does not have any attachments for which there'll be a test. So you're off the hook there. This resolve is drafted establishes a working group to study changing the start of the state fiscal year from July 1st to October 1st. And in testimony, a representative of the judiciary requested consideration of an amendment that would add a member of the working group to be appointed by the Chief Justice. That was the only real amendment that came out of testimony. And if you care, go through with the bill, it would need to be amended to move out the reporting date, because that obviously has passed. So, and a preliminary fiscal impact statement has not been completed, but if passed, the resolve would, if enacted, would likely go to the study table, or at least be flagged for the study table. That's what I have to say on that one.
Thank you. What's the discussion on this bill? Representative Arata.
Thank you. I'm in support of this bill because it is a study. It's not making drastic changes immediately, but this has been done in other states, and it seems like it could, depending on the results of the study, it could create a better workflow for state government. It seems very rational to start our fiscal year the same time as the federal fiscal year begins. And I think it would have the potential to cause Democrats and Republicans to work better together. We won't be on such a tight timeline, and maybe we can sort out budgets, take the time to really sort out budgets in a way that can benefit both parties. I don't see a problem with sending it to the to the study table. So that's why I'm going to support it with the amendment to change the date out 1 year. But that's what do you want me to make I'll let some.
Have a little discussion first. Representative Fredette.
Thank you. And I appreciate the good work of Senator Bennett. I always have. As most people in this building, we don't always agree. I think this is sort of one of those examples where I don't necessarily think we agree. I think we got enough on our plate without sort of undertaking more work. I think if this is something that wants to come around when new people are elected in the next set of elections, and I think a bill could be put in, and I think in the normal course, it could be considered at that point in time. And so that's my discussion. I can make a motion if you want me to, or we can discuss it some more.
Well, it says any other thoughts? Representative, why don't you go ahead then?
So I would move, and my legal mind is sort of, I'd do a motion to dismiss, which is what I would do in a.
Well, then we'd have to brief it and argue in front of a judge. So
But
we're not going to do that. So.
I would move ought not to pass.
Is there a second? So it's been moved by Representative Fredette, seconded by Representative Matlack, ought not to pass. Discussion on the motion. Representative Matlack.
Thank you, Mr. Chair. I just think about the communities in my district, and right about now, not all of them have the same budget cycle. Some of them are January 1, some are July 1, and one is sometime in, I don't know, October. Anyways, they're all over the place, but I believe that many municipalities have been trying over the past few years to line up on a July 1 to June 30th fiscal year, because they look upon that as the best way to do it, and lining it up with the state, and then having the budget in place. I know that there are some issues, but I believe that the July 1 to June 30th timeframe is supported by most of the municipalities in the state, because that's the one that they deal with.
Representative Arata.
Thank you. In my time on my local school board, it was always a stressful thing to be waiting for the state government to come out. And I always wondered, well, why didn't our community move our fiscal year start date as well? So, I mean, I would not support this bill if it were to make this change right now. But where it's just a study and they could have input from various municipalities. That's why I support it. It's just a study. It's not making any drastic changes, and maybe the municipalities would embrace a change. We can all be uniform across the whole state. I don't know. I'm not gonna tell them what to do, but I don't see a problem with passing this as a resolve for study. Thanks.
Representative Sharp.
Thank you, Mr. Chair. One of the things that I struggle with in the discussion of this bill is we're talking about aligning the state's fiscal year with a fiscal year that really is just a date. When we look at the federal government and how they do things, they don't operate based on their fiscal year ends September 30, even though it does. They operate on whatever's convenient at the time, and they budget by way of continuing resolutions. I'm concerned that tying our fiscal year to the federal fiscal year, in addition to the concerns that Representative Matlack spoke about, because I have heard the same thing in our local districts, I'm concerned that in addition to what we've seen for history here in the state over the last 6 years, is we're just all kind of moving towards this. We don't ever pass a true budget. We just do continuing resolutions. And so I don't see a reason to conform to their date. And I don't know that we should spend the money to even look at it, because I can see there's a whole lot of potholes in that road. So I won't be supporting this.
You will be supporting the ought not to pass? Okay, thank you. Any other comments? Okay, all those in favor of ought not to pass? Opposed? So it's 11 in favor, 1 opposed. Thank you.
So I just need a little clarification on your minority report. So it would.
Thank you. My minority report will be out to pass, but moving the reporting date out at least
Okay.
1 year.
And about the suggestion to include a member appointed by the Chief Justice, would that be not?
No, I don't think that's necessary.
Okay, so just change the dates.
Yeah,
Okay,
thank you.
great. Out 1 year, correct?
Thank you. So the next item is LD 1725, an act to authorize the issuance of a revenue bond to upgrade county jails to meet the corrections needs of Maine's counties. Maureen, do you have a bill analysis for this one?
Yes, I have a couple of things. So as written, the bill authorizes the Finance Authority of Maine to issue revenue bonds in the amount of $87 million to provide funding to county jails and jails used as holding facilities for adult residents on a pro rata basis for improvements that would allow the facilities to accommodate residents with substance abuse disorder and assist those residents in obtaining treatment and recovery, and to supplement the needs of jails and holding facilities that have potential funding shortfalls. Of the funds needed to repay the bonds, 50% must come from funds received from the contract for wholesale spirits and marketing, and 50% must come from opioid settlement funds deposited into the Maine recovery funds. The sponsor indicated during testimony that the percentages from each named source of the repayment may need to be amended. So that's one potential change. FAME testimony stated that that their experience with revenue bonds is limited and that their mission relates to support of business and educational goals. Given that testimony, one possible amendment would be to assign the issuance of the revenue bonds to the Maine Governmental Facilities Authority. The Attorney General testified that the Maine Recovery Council was established under the terms of the court orders securing the funds and memorandum of understanding between his office and other litigating parties and codified in statute. He suggested that the bill be amended in such a way that the funds under the purview of the council not be committed by the legislature. So other potential issues or technical considerations, again, the bill would have to be amended to move the date since this was a carryover. The methodology of distribution of funding may need to be more specific, either through this bill or rulemaking. If the ratios are intended to mimic current state funding of county jails, that could be so stated. I think that there is a reference to pro rata. So how exactly that would be determined should probably be included. Given that parts of the proceeds of the bonds would be authorized to be used to, quote, supplement the needs of jails and holding facilities that have potential funding shortfalls, consideration of whether the bonding and payouts would be done all at once or in chunks for that portion that would be used for funding shortfalls. In other words, do you bond the whole thing at once, give all the money in part for funding shortfalls, or do you bond in chunks and meet out the money for the funding shortfalls? The percentage of funding for the revenue bond payments to be diverted from the liquor operations revenue fund must be further specified between the 7 million that would have been credited to the general fund and the remainder that would have been credited to the highway fund. And the title that talks about the revenue or the liquor money and how that's divvied up, that would have to be altered depending on which of what money you wanted diverted. Also attached to that analysis in your packets is a little chart that I did a bond amortization of the $87 million bond. I did an amortization schedule assuming 5% for no reason. I think that's what they're using now for fiscal notes for general obligation bonds. So I just stuck that in there, and it gives a total of how much would have to be paid each year. And it's about 11 million a year. And then I did the other part of the chart is the liquor profit, the forecasted liquor revenue profit, 7 million of which goes to the general fund, and the highway fund portion is 62.9 million for a total of, and 50% of that total of the two is almost 35 million. The Maine Recovery Council revenue forecasted, I put into the third section of that chart, and it's varies over the years, but 50% of that would be about 3.5 million a year. So you can see that every year you would need to pay 11 million for the bond, and you would get 34 million from the liquor. So you would, and 3.5 million from the Maine Recovery Council. Obviously, you don't need the whole 50% of the liquor to pay the bond, but you can just kind of see how much percentage-wise from each of those sources it would be. Did that make any sense at all? Okay.
I mean, who doesn't love a good amortization schedule? So, I mean, just the fact that it's here is very much appreciated. And I'm not a banker. Representative Fredette.
And so I want to recognize my constituent, Andre Cushing here, who obviously also serves, I believe, as the president of the County Commissioners Association, Solomon Millett, who I also believe serves as a county commissioner, Oxford County. And, you know, this bill harkens back to, you know, my days from 2010 to 2018, when we had ongoing conflict regarding county jails, funding of them, who has control of them, and whatnot. And it probably even goes back to Governor Baldacci's time when he was in office. And, you know, my recollection is that, you know, at the end of the day, simply out of frustration, the entities that have been in place or processes that were working or not working were sort of set aside. Because at the end of the day, at least in my recollection, the counties wanted control over their own jails. And that's just kind of my own simple recollection and version of the facts. I see issues not only obviously in Penobscot County where they need a new jail. Obviously, Waldo County's having their own budget problems down there, I think with a proposed 30%, 36% budget increase. Washington County, I can't even tell you what's going on in Washington County at the county level, as they are either misplaced or didn't account for about $11 million that taxpayers are going to have to come up with. And as I look at this bill, I mean, we have failed at trying to really address the county jail problem and the housing of inmates problem. Often, as we all know, many of which have mental health issues. I don't know if I see this in my mind as a bailout for the counties in regards to, the jails, because it hasn't worked at the county level. I think we're going to need a lot of time and a lot of work to really work through this. We all know it's a problem, but I'm just not really sure that we're there yet in terms of what the solution is. And I only say that as a tee up, as I suspect we're going to table this bill as well today, that I think it's going to take a lot of work. And I know in Penobscot County, we have a real problem as well. I'm not sure I know what the solution is. And again, I think this is just going to be something that's going to be on our plate in January, February, and March, and probably April. But obviously, I look forward to working with the interested parties and my counterparts in the committee at trying to come up with something that's workable. But at the same time, I think that there's efficiencies in collaboration that haven't been achieved when every county is kind of doing their own thing to some extent. And I think there can be efficiencies that can be achieved, and what the structure is that does that. I don't know the answer to that. And I suspect we'll be looking to our analyst to come up with some suggestions. But I think there's just a lot of work, in my opinion, that needs to be done on this. And so I'll at least make the motion to table for now and leave it at that.
Yeah. Can we just hold off on the table in case anybody has any comments? But I'm probably with you. Representative Matlack.
Thank you very much, Mr. Chair. I would like to postpone this. I'm not sure how long, whether tabling it solves the issue or not, but in LE 719, which was a resolve to direct the County Correction Professional Standards Council to examine funding of and compliance by county and regional jails. Their report is due back to the Criminal Justice and Public Safety Committee in the middle of January. So I think holding off until that study is in addition to which, we know that Androscoggin, Oxford, and Franklin counties are exploring building a regional jail, which they have just begun. So I'd like to wait until their report is back in. And I also know that the county I live in, Knox County, has recently come to an agreement with Two Bridges, a little bit south of us, so that we will no longer have a jail, but we will support the Two Bridges jail with our funds. So there is those costs to be dealt with also. So I think at this point, it's not an opportune time to decide whether or not we should move forward with the revenue bond.
Representative Stover, then Representative Ducharme.
I just have one comment. I go back to Attorney General Fry made a clear recommendation as the only legislator currently sitting on the Maine Recovery Council. I think it's really important for us to remember, in tabling or not, that the Recovery Council funds cannot be used for they're part of a settlement agreement and cannot be used for this purpose. I think whatever group is looking at, whether it's the LD 719 group or whoever's going to look at it in the future, you really can't take those settlement funds and repurpose them in that way. And I just wanted to reiterate that because it's clearly stated in AG Fry's testimony. Thank you.
Thank you, Representative Deschamps.
I too will be supporting tabling. This is my bill, and part of as we have heard today, there's a number of different things going on, reports being waited on, and different issues being dealt with. Not the least of which is some legislation that's before transportation that has impact on the liquor fund. And so I'm going to be in support of tabling it.
And I think I agree with most everything that's been said around this horseshoe on this bill. So I'm going to give Representative Fredette the opportunity to make that motion now if he wants to.
Thank you, Mr. Chair. I move to table this item until later in the day's session.
Is there a second? So it's been moved by Representative Fredette, seconded by Representative Deschamps that we table this bill. No discussion on the tabling motion. All those in favor? We are 12-0 in support of tabling. So I think I'm going to turn this over to my co-chairs. There's one other item we're going to do this afternoon, Senator Rotundo.
And sadly, it's to say goodbye to Maureen. This is our last meeting with her. And I just wanted to give people the opportunity, if they wanted, to say farewell. Yes, Representative Fredette.
Well, obviously these are tough times. I'm not sure if I know a time when they haven't been tough. At least in my time in the legislature, going on 10 years now. And when you're dealing with tough issues in tough times, and you're dealing with ultimately issues that impact people's lives on a daily basis, short-term, long-term, I think we sort of, to some degree, come in as lay people trying to understand complex issues. But more importantly, what are the historical issues that also impact either current legislation or a proposed piece of legislation going forward? I've always been impressed with the quality of the staff at OFPR. I think in my years from 2010 to 18, I think we worked generally in the same capacity. It was a seamless transition to come back and be talking about budget 6 years later, but always knowing that I could come to you and ask a question. I would get a straight answer. I'd get a fast answer. I think the people of the state of Maine sometimes don't realize the quality, the professionalism of the civil servants, not only in state government, but particularly on this committee. So I can only share with you that I recently retired from the military, and there was life after the military. And so I wish you the best in life after OFPR, because there is, and I wish you the very best.
Yeah, all right, we'll go around the circle.
Decca.
Representative Dilla.
You're running that now.
It's okay.
Thank you, Madam Chair. And I can only say thank you so much, Maureen, for working with us and try to keep us, a straight line. And your weekends, I remember you coming to us on weekends, and I'm like, oh my God. But for not only for, people of Maine working your public service for all these years, but also helping this committee really keep us in line and making sure that we had the information that we needed to make sure this committee is efficient and working straight for the people of Maine. So enjoy your retirement. I will do that when I grow up. And I'm just saying that because of your humorous. You always make us also laugh. So just wanted to make you laugh. But I'm not that young. I'm just close to your age, but hopefully I will do the same thing soon. So thank you so much.
You don't have to grow up to retire. I'm living.
Maureen, I just want to thank you for your expertise, for your patience, for your wisdom, for your really collective wisdom that in this building and particularly in this room, having the ability to work with you and your extraordinary experience. You never appear to be ruffled. You just sort of ride it out. And it's truly been an honor to work with you. And I mean that most sincerely. So I wish you all the best. You deserve this in so many ways. And don't answer your phone for a few months because a lot of people are going to want you on their boards. They're going to want you to be their treasurer or they're this or they're that and take some time for yourself. And my mom said the best thing about retirement is on snowy days, she didn't have to leave the house if she didn't want to. So I wish that for you this winter. And thank you for everything.
I said a few words the other day, and I'll just reiterate my gratitude for your efforts in helping me to step into a role that was filled by the dean of state budgets for many years. As I said the other day, I will say it again, I was terrified when I was asked to fill in the role. You helped in removing some of that terror in doing this role. And it was because of your professionalism, because of your knowledge and your experience that I feel like I've been able to even sit in this chair as a ranking Republican. I couldn't have done it without you, and I'm looking forward to working with Lucia, and I'm hoping that you go and plant all kinds of flowers and enjoy yourself. I know you like flowers, and we've talked about flower gardens and so forth, so I hope your flower gardens are always blooming.
Well, first of all, I want to meet Maureen. I want to meet Holly's mom, who will tell me that I don't have to get out of bed or leave my house when it's snowing. I would never be leaving, ever. But besides that, I want to tell you, Maureen, that you have made this time here for me as a first-time senator on this committee far less frightening. You've really directed me, and I see you direct everyone else in the kind way that you have. I've told you this before, one of my fondest memories of Maureen is that, and it happened more than one time, that I might be here late one night for whatever reason, and I would come into this room going through to exit or something, and there's Maureen in this corner by herself, not seeming sad about it, and it's late. I mean, it's way after hours. And so I had to ask her one time, and I just said, Maureen, why are you still here? And she said, I like to pretend that this is my house. And so I'm here in my house, great big house, you got to admit it's big. But other than big, would you really want to be here all by yourself? And she seemed to really want to. And that's what we see in Maureen, as somebody who really wants to do the service that she has provided. And it's you make us all look up to you, and I will miss you terribly because you can't be no one can replace you. It's as simple as that. But thank you.
Hi, Maureen. I haven't known you very long, but I can already tell I'm going to miss you. And if I've known you this amount of time and I know that I'm going to miss you, I kind of feel bad for the rest of you suckers. I'm sorry. But I wish you well in your future endeavors. And I hope you give me a call if you ever come to District 13.
This is fun. I thought our work sessions were really good, but this is really a lot of fun. Also had the opportunity to say some things a couple weeks ago, and I'm not going to try to repeat all those things. But I was thinking as Representative Ducharme was talking that first time that I ever walked in this room and sat in this chair as House Chair, it was pretty scary. Then Representative Rotundo had just turned out, and I was filling some pretty big, trying to fill some really big shoes, and as those of us that were here remember, that was a pretty tough budget cycle. Maureen, it's hard for me to imagine sitting here now today ever doing any of that work without your help and your support. And we will find a way to get by. And Chris has a great plan in place. So we will do our best, but it is not going to be the same. And I just think of all the times I walked into that office and made a right-hand turn and went into your office, and you always smiled at me, and I would lay out some crazy idea, to get us out of some crazy problem. And you very politely explain to me, without using the word crazy, why why that was crazy. And I just think of all the work that we do around here that we try really hard to do together, whether we're successful or not. I think of the work we do with OFPR as something that we always do together. And obviously you've been the spearhead of all of that. And I've said this before. I just wish the people of the state of Maine had some level of knowledge and appreciation of the work that you do and the work that people who are in your role do, because it is public service at its most important and basic level. And I just want to close by saying, I just really hope you enjoy your retirement. I think we're thinking a lot about what are we going to do, but I want to think about what you're going to do. And I hope that it's just a lot of fun and good memories. And you've earned it. And I just hope you really, really enjoy what your next phase of your life looks like. So thank you.
Well, Maureen, you've witnessed a Christmas miracle here. We can't agree on anything, but we all agree that we love Maureen. And of course, and what a gift you've been, because you're the whole package. You have the integrity, the intellect, the work ethic, and the sense of humor that we all need. So thank you so much. And I hope that I see you out hiking on that mountain out there once in a while if we ever get a break.
It really is because I came back on AFA, isn't it, Maureen? You did. She did tell me it was all about me coming back. I will miss you. I heard legends about you before I came on to AFA, and they were all true. And those spreadsheets of yours are absolutely fabulous and so informational. And when you correct people, you do it kindly, because we need corrections on a regular basis. And I will miss your laugh the most because you have a great laugh, and I will just miss you terribly. And thank you so much for all you've done.
Yes, thank you, Maureen, for everything you've done for us. I think Chris Nolan said it best when he said that we're not replacing, we have a succession plan, because you cannot replace the institutional knowledge that you have brought here to this committee. And to say that we're extremely thankful for that is an understatement. And so I know that Lucia is going to have some really big shoes to fill. I hope she's as fun as you are. Thank you for everything you've done.
Well, one of the good things about going last is that you're last. One of the difficult things is that everybody has summarized and been eloquent and had some pretty good sound bites along the way. And it's kind of hard to say something new and different that would be reflective of how I feel at this particular point. But Maureen did remind me that I first met her a number of years ago when she was going to visit Joe Brannigan, who is former state senator from Portland, who was the chair of the Appropriations Committee. So that was my first contact with Maureen. But this past June, I finished my 20th year in the legislature. And for 20 years, I was not on the Appropriations Committee for a number of different reasons, which I don't need to spend a whole lot of time on at this particular point. But you have made this year simultaneously enjoyable and productive for me being on the committee. And I want to go back to something that Representative Fredette said, but the public only sees the 15% or 10% that we argue about and we disagree about in the legislature. They don't see the 85% of the heart and soul of the work that we do in committees, where there's genuine discussion, where there's genuine agreement, and there's genuine thought about how we can work together to come, even earlier today about the different bills that we talked about. But what they really never see is the staff and the professionalism of the staff and the public commitment that the staff has to make that committee process works. And you have been the heart and soul of this committee for a number of years. And the success that this committee has had and subsequently the legislature has had is due to the work and the commitment you've had. And somebody else mentioned this as well. One of the arts of being a policy person out of OPLA is that you're able to tell legislators they're wrong without telling them that. And I always appreciate the ability that you have, Representative Matlock mentioned it, of being able to steer us in the right direction without, and let us believe that we actually figured out that that was the right direction to go with. And that's an extraordinary talent and extraordinary skill that hopefully you'll have an opportunity to use in your retirement. But I do see the succession plan, but it's very important. And I think it was great that we stopped and spent a moment reflecting on what you've contributed to the state of Maine. So thank you.
Nothing can be added to the articulate and heartfelt expressions of appreciation for you, Maureen. I guess I just need to add one more. I was Senate Chair of Appropriations when you were hired. So we go back a long way. And I want to say one of the things, in addition to everything that's been said, so true about you. So everything that's been said today in terms of how exemplary you are as a public servant. I've always appreciated the fact that I knew that in your heart, nothing would make you happier than having us work together in a bipartisan way. And you know, I think for all of us with different perspectives to have such trust in you just speaks volumes about you. And the fact that I always felt that you were willing us toward, you know, coming together. And sometimes it worked and sometimes it didn't. But the fact that I knew that that's what you were willing us toward, hoping for, was always important to me. And for me, it was just like, okay, we're going to make this extra effort. We're going to make this, you know, we can do this. We can do this. And usually we did. Not always, but usually. And I thank you for that. That's just been very important to me, along with everything else that's been expressed today. We do have a gift for you. I know. And don't open it now because it will embarrass you. I know as though you aren't already. I know. You poor thing. You've just had to sit there and listen to people's tell you what's in their hearts about you. Yeah. On behalf of all of us, Maureen, we have this gift for you, and it comes with all of our love and appreciation.
I just want to say thank you for all of those words. it makes it kind of hard now to leave, but I'm still going to do it. But it's been every session, every committee has been a treasure, absolute treasure. Even those times when I didn't think you were a treasure, you were a treasure. So, and I'm really grateful to be a part of what's been going on here for the last 18 years. And I'm proud of some of the things I've done. Some were cringeworthy. And some I hope you never find out about. Saying, my boss isn't here. Okay. But again, thank you so very much.
Thank you, Maureen. And with that, there's no other business to come before the committee. We'll adjourn. Have a peaceful and stress-free and joyful and safe holiday.